All right. All right. Welcome, ladies and gentlemen. This is Matt from A Better Track. We have Chirs Wygant with us today. Among other things on his resume, he is also my brother. And he is here today to talk to us about predatory lending practices. As part of our curriculum, we have a financial literacy component to our courses. One of the things that we've discovered with a lot of young people that we work with is one of the first major things that's going to happen with their credit is they're either going to open a credit card account or they're going to purchase a vehicle. And being a young person with no credit history or limited credit history or even poor credit history, especially for some of our justice involved youth that have had a lot of court fines and such, there's a lot of predatory practices that exist out there. And so Chirs has had some experience working in that industry in the past, and he's going to talk to us a little bit about his work experience working for high interest car loans and being familiar with that. And he's also going to talk a little bit about some of the things to watch out for as we start to make that big first car purchase. For a lot of our students, Chirs, we really appreciate you coming out. For a lot of our students, this is going to be their first interaction with a bank, with a loan, and something that's going to significantly impact their credit history. And I know you have a lot of experience with that, and we appreciate you coming out today. Can you kind of kick it off with a little bit of an intro about your career path leading up to the point where you started working with auto finance?
Yeah, so I worked as a loan officer in auto finance, in personal loans and mostly automotive loans or secured personal loans, and was a loan officer with a company called Reliable Credit Association for about 3 years.
And how did you end up getting that job?
I actually went through a third-party recruiter. So I was freshly out of college, had a business administration degree with a focus in management, and no real direction coming out of college. So I reached out and worked with a third-party headhunter at a company called Career Paths Northwest. Got hooked up with them, and they got me the initial interview at the credit association, and I was able to get in there as an entry-level loan officer.
Awesome. So can you kind of take us through the job duties and a day in the life of the loan officer?
Yeah, day in the life of a loan officer was primarily really sifting through and reviewing credit applications to determine loan qualifications, right? So looking at all those aspects that any loan officer would look at to determine what value or what amount that an individual would qualify for. So looking at things like current job time, reviewing credit reports to see what things would pop up on the credit report, evaluating debt to income ratios, looking at landlord references, really anything and everything that one might look at in order to say yay or nay on any kind of small automotive or personal loan.
What were like the biggest factors that determined the loan? Was it income to debt ratio? Was it credit history? What were some of the big factors that would determine either a yes to a loan or the rate, that the interest rate that the customer would get?
Yeah, I think you hit the nail on the head there with those two. So really looking at debt to income ratio, right? So can the individual afford the loan that they're applying for, right? Based on what their income is and based on what we're seeing on a credit report in terms of payments they have, right? So on that credit application, they're going to list their rent payment. They're going to list, their total kind of bills of utilities and what comes up there. So looking at those to make sure that those both align with what's on the application is to what's on the credit application, and then really determining, can they afford it, right? So that's the first thing. Can they afford this loan? And then looking at the credit, the credit report and seeing if they've had any defaults. And then asking the question and actually speaking to the individual to ask what happened if there was defaults on their credit report.
Okay. What kind of things have you seen that would qualify as a default? I think it'd be helpful for our students to know what does default mean?
I mean, really anything and anything, right? So you're looking at anything that shows up on that credit report, right? So it's not really going to be your rent or necessarily utilities, but sometimes those things do show up on our credit report. So it is important to make sure that you're staying up on those. But really credit cards, right? Any past auto loans, right? So if there's a default on a past auto loan, you have to evaluate the likelihood that they might default on this one. looking at any previous repossessions, if those things, sometimes things are popping up on the credit report. But I mean, it could be really anything. It could be an Xbox account. It could be, any of these small credit things, or there's a payday loan or something that popped up on their credit report that if there's any kind of defaults, we want to find out as to what happened there.
Gotcha. So when you first started working here, what did you think? What was your first impression of the job when you started there, like kind of 30 days in? What was your first impression of it?
It was a high volume, high pressure, fast paced environment. So really had to kind of jump in and kind of sink or swim in that type of environment. So it was really challenging to myself, being fresh out of college and not really having that kind of business experience. So it was definitely jumping 2 feet in and really getting exposed to that type of culture, that type of environment all at once.
How would you describe the culture at a bank like that?
It was, describing a culture at a bank like that, right? So it's subprime lending. You're working with a lot of individuals that are put into some difficult spots in their life, whether it's they lost their job at one point and defaulted on a past loan, or they have evictions on their credit. So you're working with individuals that have been put in some tough situations, and then trying to help them get out of that, right? Whether you're trying to help them build credit initially, or whether you're trying to help them rebuild their credit. When you're in any kind of subprime lender, that's typically the kind of the situation that most of those individuals are in. So in that culture, it comes with a lot of learning how to deal with conflict with individuals, and I think that's one of the biggest things that I got out of that role. Was working with customers when they're in conflict, when they get denied a loan or their vehicle gets repossessed, having to work with those individuals in those situations to come up with the solution. It can be a tough and intimidating environment for somebody that's not worked in that type of environment or that type of culture, that type of industry before.
So what were some of the things that you disliked about the position?
In terms of dislikes, I mean, it's never fun to be the bad guy, right? But each position, every job has its pros and cons. So I mean, I did not really enjoy the debt collection portion of it, right? So having to call people and ask for their money, right, to be able to pay their bills, to pay for their auto loan or their personal secured loan. So that portion of it was never a fun portion of the job. I guess that was kind of one of the unpleasant parts of it, but comes with the job.
Okay, so you got this job, you find yourself working in this new bank. You're doing subprime lending. Can you define subprime lending for our students? What does that mean?
Yeah, so really, when you're talking about subprime lending, you're talking about high interest rates, right? So anything that's above the prime rate. So you're talking, and you get into those double digit, percentages of 15 to 20%, 25% interest rates, which for an automotive loan is a very high interest rate. It's a high interest rate period. So that's what you're talking about subprime, when it's above kind of the prime interest rate. And you get into those high interest rates.
Okay, and so for students like ours, young people might find themselves in a subprime lending situation if they've struggled with credit card payments in the past, or they've had an eviction in the past. They might find themselves in a subprime lending place if they've already had some bad credit as a young person already.
Yes, yeah, absolutely. I think I don't necessarily agree with it, but many times no credit is viewed as bad credit. So you get stuck in those situations where you really don't have a choice but to pay the subprime rate or the higher rate in order to establish credit for yourself.
Yeah, and so this is actually really timely. We were talking about this last week about the no credit versus bad credit, and a lot of the students and kids were asking, like, well, how do you gain credit, right? And what it comes down to is they have kind of three options. They either open a credit card and start building credit that way. They apply for a car loan, which is always seems to be an option, even if you have no credit. There's a bank out there that's willing to give you at least a shot. Or then the other one is to have a parent carry you on a credit card so that you can start establishing as well. For a lot of our students, one of the big things that their options more than likely are going to be a vehicle purchase, and or opening a credit card or some combination of the two. If you had some advice to give some of these young people about walking in and they want that vehicle, they're ready to purchase a car, they've got some months in on a job now, maybe a little money saved, and they're coming into a subprime bank to get a bank loan, what are a couple of the things that you would have them watch out for? What are some warning signs that they need to do in order to avoid some credit traps?
Yeah, I think a lot of those credit traps, right, are not necessarily going to come from the bank, but they're going to come from the car dealers themselves. So I think there's a few things you can do to kind of protect yourself as you go into, purchasing your first vehicle. And some of those things are, when you're working with the dealership, don't sign anything that you're uncomfortable with signing, right? They put a lot of pressure on to sign. Don't ever drive a vehicle off the lot without having signed paperwork. Many times they'll do a bait and switch where they're like, yeah, we'll work with the bank. We'll get you approved through this bank. You can go ahead and take the vehicle today. We'll sign papers next week. You come in next week and, they didn't get that loan approved. And all of a sudden they're trying to put you into a lesser vehicle or a vehicle that's, got high miles or, they'll try to kind of do a bait and switch. That's something to look out for. And if it is, you can still walk away at that point. Don't be afraid to walk away. I think those are some of the things that you can look out for. I think going into it, knowing a little bit about what you have to play with, right? So know your debt to income ratio, right? Know what your gross pay is versus your net income. Know, how much you can budget and account for that and give yourself a buffer, right? Make sure when you're budgeting yourself that you give yourself an extra $100, $200, buffer in terms of your budget. Make sure you're paying those small little bills that you can on time, your cell phone, your rent, your utilities, your Netflix. Make sure that you're paying those things on time to help establish what little credit you might have. Make sure it's good credit.
Gotcha. Hang on, it froze for a second here. There we go. It froze for just a second. Let me adjust something here real quick. All right, I think we're back. Sometimes if I stay on the Wi-Fi with other devices, it makes it not so great. Okay, so kind of knowing that credit history, not signing anything that you're uncomfortable with. Is there anything else that they need to look out for? And I find it interesting you say like the real kind of trap is starts at the dealership level. What else do you see as a trap when you work there in the past?
Yeah, I think, be on the lookout for a lot of those add-on, fees or insurances, right? You're going to hear the word gap insurance mentioned, which sometimes is a viable option for some folks. But yeah, making sure you're reading the paperwork, knowing what you're signing before you do it, know the bank that you're working with. And in many cases, you can go to the bank first before you go to the dealership. And that would be something I would highly recommend for a first-time buyer is going to an established financial institution, your bank that you bank with, and sit down with a loan officer to say, hey, what might I qualify in terms of a loan and what might I qualify in terms of a rate?
Gotcha. How valuable is the down payment? How much does that help with the situation? If a kid bringing something in like, I don't know, 20-30% of the car, or maybe even more.
In terms of a first-time buyer of a vehicle, or maybe if you've had bad credit in the past in trying to rebuild that credit through a vehicle purchase, there is a high value. It's highly weighted when the loan officers are doing that credit application. That if you are investing a large chunk of your own money, that the likelihood is the default is going to be a lot less. So there is a lot of value added into that. So there is something to say for, saving up that couple of $1,000s to put down on that vehicle, ahead of time is something that's highly valued and highly weighted when reviewing those applications.
Okay. I forgot where I was going. I had another one for you. Oh, I remember where it was. So, if you have these young people they're kind of stuck with the subprime to start out with. What's the best advice you have? Like, okay, you have the subprime loan. This is what you need to do in order to take full advantage to get your credit up and get into a better loan. What does that look like for them?
Yeah, again, I think it comes down to that debt to income ratio, right? So if you have budget yourself well enough to the point where you can overpay a little bit each month, even if it's just a little bit, that overpayment does not go towards interest. It goes towards the principal balance, and you'll pay it off quicker, essentially paying less interest in the long run, and trying to build up that credit along with paying it off early and paying less interest. And don't miss a payment, right? So I think that's the biggest thing. As soon as you miss a payment and it goes a week, 2 weeks past due, you're accruing extra interest and it's compounded on top of itself. And you can quickly kind of find yourself in a financial quicksand, if you will. So it's easy to get into that rut. It's easy to fall into that quicksand, especially when it's at a high interest rate. So I think the best things that you can do is make sure that you're paying that on time. You have yourself well budgeted. That's really it.
Okay. What were the top, like, kind of 2 or 3 mistakes that you would see people make, from all the way from the dealership to the loan with you? What did you see? What was like the most common mistake that you saw people make that was hurting their credit?
The most common mistake I think that I saw, most folks make, particularly young first-time buyers, is not being practical about what they can afford, right? And not being practical about the vehicle that they're purchasing. I think that's there's all those little tangibles that need to be considered, right? So if you're buying a vehicle, you got to know what your commute looks like to work, right? How much gas is that going to take to get to and from work every week? How much gas, or how much is that going to cost you every week? And accounting for those things, accounting for the vehicle maintenance, right? How many miles are on this vehicle and how long is it going to last? Is it something that's going to break down and I'm not going to be able to afford to get it fixed? So I think kind of the be practical, not cool when you're trying to purchase that first vehicle. Everybody's guilty of it, right?
Yeah.
I didn't get my first cool car until 2 years ago, right? So 34 years old, I finally got my first cool car. So there's something to that about being smart about what makes sense and is this, financially doable for myself.
And never underestimate the cost of tires. That was always a shocker for me.
Yeah.
Coming in. Okay. So one of the things that I wanted that we talked about, first of all, I appreciate you talking about the loan piece. This is something that I think for 18-year-old to 20-year-old students that we have, this is something that they're a little bit scared of, or instead of being scared, they're super excited about, and there's a lot of rushing in and just the main focus on your brain at that point is, I want to drive away in that new car or that cool car. And there's a lot of mistakes that get made along the way in terms of budget and credit history and all of that. And so I appreciate you sharing some of your experience with us. One of the things that we talked about sharing was a little bit about your recent job history. We teach Job Hunting 101 is probably one of the biggest components that we do with our curriculum in the public school systems, where we actually go out and hunt for jobs with kids. It's one of the things that teaches, I think, some of those soft skills that are necessary, and then it boosts a lot of their confidence as well. One of the things that I appreciate about your story recently was the grind that you had to put out to get the job that you have now. I think that story is a little bit relevant in terms of some of our kids get discouraged pretty quickly if they don't hear back from somebody or if it doesn't work out right away. Do you mind sharing a little bit about that story?
Yeah, so just a quick little bit of background. So prior to my current role, I was in aerospace, working in sales in aerospace. And as you can imagine, when COVID hit back in March of 2020, the impact to the aerospace industry was massive. So made it through the first round of layoffs, but did not make it through the second round of layoffs. And I was laid off back in October of 2020, and found myself in a very difficult uphill battle of starting all over all at once to go out and go into the job market and try to find a new job. So yeah, I think being tasked with that and the pressures of life on top of that Really found myself in a unique position and a tough position to get back into the job search. And it's a grind. There's no ifs, ands, or buts about it. It is an absolute grind, with how the competition is and how quickly jobs can pop up and then they're gone, a day or two later because of so many applicants. The competition these days with all the different websites through LinkedIn, through Indeed, through ZipRecruiter, all these different platforms that are out there make it the competition just extreme. And I found myself in several instances where it was absolutely discouraging, right? To, submit so many applications to so many different companies for so many different roles. Ones that I knew I was overqualified for, but still looking for, a foot in the door, or, potentially a one up level job once I got my foot in the door. So, and still not hearing back on any of those. And then on the ones that you do hear back, and you go through all the way through the interview process. One of the first ones I had out of the gate was for a sales role for a satellite company. And I went through, I think, 9 different interviews, and still ended up losing the job to an internal candidate. So it can be an absolute grind. But my biggest piece of advice is, you have to make finding a job your job, and wake up in the morning and make your coffee and go at it just like that. It took me 163 applications, 27 different interviews, to get one yes. So it was it's a battle, but that's what it takes.
I love, thank you for sharing. I love the make getting a job your job. I think that's really important. And those numbers are super important. Can you repeat those numbers one more time for us?
Yeah, I kept it pretty memorized after the grind that I went through. So yeah, it took me 163 different job applications and 27 different interviews, and ultimately just one yes, right? So and it got me to, and not the exact way that I planned on getting into this industry and the position that I'm in, but it was always kind of a long-term plan to land where I'm at now. My hand just got forced a little bit sooner than I was expecting, but that's what it takes. It's a grind. It's absolutely a grind. It's easy to get discouraged, but yeah, you have to make finding a job. That's your job.
Okay. Yeah, I love that. I love that text message because when you text me when you got that job, and you text me those numbers, and it was timely because I was able to hand the phone to a kid that we were actually job hunting
That's right.
at the
Yeah.
time with. So I love that, and I utilize that story quite a bit. I think it's not related to the predatory lending, but it is one of those things that I think is important for our kids to hear and our students to understand, is that this takes a lot of applications. That it's, I relate it to fishing a lot. Like, you're not always going to catch something on the first cast, and it's going to take this repetitive, consistent effort to grab it and to be able to be successful with it. Appreciate you, brother. I appreciate you showing up and doing this. I'm gonna hit stop record. So thank you for sharing some of your work experience with us. Maybe after COVID, we can have you show up in person and talk about some of this stuff.
Absolutely, guys. Thanks for having me.
Yep.